few reminders as we begin. Once you start speaking, there will be a slight delay before you're displayed on the screen. To minimize background noise, please click the mute button until it is your turn to speak or ask questions. You should have one box on your screens labeled clock that will show you how much time is remaining. For witnesses, you'll have 5 minutes for opening statements. For all senators, the 5-minute clock still applies to questions. At 30 seconds remaining for your statements and questions, you'll hear a bell ring to remind you that your time is almost expired. It will ring again when your time has expired. If there's a technology issue, we'll move to the next witness or senator until it is resolved. To simplify the speaking order process, Ranking Member Toomey and I have agreed to go by seniority for this hearing. On Sunday, we marked the 53rd anniversary of the passage of the Fair Housing Act. 53 years ago, jarred by the assassination of the Reverend Dr. Martin Luther King, our country finally made it illegal to refuse to sell a home or rent an apartment to someone based on the color of their skin. It was an historic moment. It was a hard-fought victory for civil rights advocates, and it was not so long ago when you look at the long arc of history. Black Americans had endured centuries, that's generation after generation after generation of slavery, only to be locked into second-class citizenship by the black codes and Jim Crow laws that made it nearly impossible to get a good-paying job, to keep a reliable bank account, and, as we all know, even to vote. As my friend Joyce Beatty said recently, we cannot change our history, but we can learn from it, and we can build a far better future, one that brings us closer to making our founding ideals real for everyone. Fair housing took longer to pass through Congress than did voting rights or did desegregation of public spaces, even equal opportunities for employment. As important as these advances were, they did not come in time to help communities of color benefit from the historic investments that our government made, that we as a society made in American families and communities in the last century. Beginning with the New Deal, continuing through the 1960s, we tried a new grand experiment in this country. We invested in workers and in infrastructure that they needed to succeed. In the process, we built the largest, broadest middle class the world had ever seen. But that deal remains unfinished because too many were purposefully left out. We created the Federal Housing Administration to make the dream of homeownership and the wealth that comes with it available to millions more families. But FHA limited its loans to neighborhoods that were deemed good investments, neighborhoods with white non-immigrant residents, neighborhoods with black and brown immigrant residents in near industrial sites were redlined or called hazardous. From 1934 to 1968, FHA helped finance more than $120 billion worth of loans. 98%, think of that, 98% of that $128 billion, 98% of that went to white borrowers. We put Americans to work building the interstate highway system, the infrastructure that would unleash new levels of American prosperity. But federal highways cut right through black and minority neighborhoods in cities like Cleveland and Baltimore and in New York, severing tight-knit communities, destroying homes and small businesses, replacing them with traffic and pollution. Following these decades of exclusion and destruction, the Fair Housing Act offered enormous promise. It just didn't ban racial discrimination. It also required that new federal funds be used in ways that would affirmatively further fair housing. In other words, we recognized it wasn't possible to start from scratch. Our housing system had our history woven into it, and we would need to take active steps to include Black Americans, all those left out. George Romney, the father of our colleague Mitt, became HUD Secretary the year after the Fair Housing Act was passed. He set out to fulfill that mission, to require communities to use their federal grants to build better housing and take active steps to include everyone as required by the new law. But Secretary Romney didn't get very far. President Nixon and his Southern strategy blocked Secretary Romney's implementation of the Fair Housing Act, and it stayed that way for decades. Housing discrimination was illegal beginning in 1968, but communities of color lived in the cities we'd already built and then abandoned and lived with the wealth inequality we had already grown. Minority communities continued to lose out on investment. FHA no longer used redlining maps, they were illegal. but communities of color still saw banks take their deposits and still refused to make them mortgage loans. Congress passed the Community Reinvestment Act, requiring banks to serve the community whose money they relied in part on to make profits. But the same neighborhoods, the ones that had red lines drawn around them a few decades earlier, never got the same investment that others did. And after nearly 3 decades later, lenders seemed to finally discover the minority communities they've been neglecting for decades. But that discovery didn't lead to positive investments to help communities build wealth and grow new businesses. Instead, predatory lenders wiped out the hard-won gains Black and brown families had made in the years since 1968. They targeted people in lower income and minority communities for predatory subprime loans and refinances. 2003, President Bush's HUD Secretary, Mel Martinez, told this committee that predatory lending posed, quote, a significant danger to minority and women homeowners targeted for equity stripping loans. And he wanted to say that some loans had abusive terms and conditions that may violate the Fair Housing Act. Of course, we know what happened. We remember the foreclosures that swept through neighborhoods in waves. We remember the signs that went up on home after home. Black and Latino homeowners were 70% more likely to face foreclosure. Today, Black, Latino, Asian families are far less likely to own a home than white families. The Black home ownership rate is as low as it was 53. Think about that. The Black ownership rate is as low as it was 53 years ago when housing discrimination was still legal. The wounds of redlining remain as fresh as ever. We know where you live determines so much about your life, what schools you go to, the kinds of jobs available, how far you have to travel to get to work, the air you breathe, the water you drink, even how long you live. Residents in those neighborhoods were systematically excluded from government. Many of them people of color, have lower life expectancies and are more likely to have pre-existing conditions. Take a walk around the community where the city where Mr. Husak and where he grew up, where I live now. Look, and you can still see the scars of the foreclosure crisis in the same neighborhoods that were colored in red in the maps of the 1930s. Come to my zip code, 44105 in the city of Cleveland. We had more foreclosures in that zip code in the first half of 2007 of any place in the country. In those neighborhoods, you'll find higher rates of lead exposure, toxic pollution, and infant mortality. Take a look at maps of COVID-19 deaths. They just happen to match up with those redlining maps pretty well. Our past is still determining people's lives today. That's the reason for this hearing. That's why the work of this committee matters. We can't change our history, but it doesn't mean we throw up our hands and tell millions of Americans, sorry, this is the best we can do, because we know it's not. Remember all those infrastructure investments we made in the 30s and the years after World War II? Remember how we created millions of new homeowners and created the middle class in this country, something the world had never seen? There's no reason we can't do the same thing again, but this time we bring along everyone. On this committee, we have an opportunity to address the legacy of housing discrimination. We have an obligation under the law that this body passed more than 5 decades ago in the wake of Dr. King's assassination. I look forward to hearing from today's witnesses how we can begin to do just that. Ranking Member Toomey, you're recognized. Thank you.
Thank you, Mr. Chairman. And let me say from the outset that a history of racial discrimination in housing is a real and sad part of our nation's history. We can't ignore that. It's a fact. It's also a fact that government policies contributed to this discrimination very significantly. Some federal government policies were in fact designed to increase segregation. We all know, and the chairman alluded to, the fact that the FHA engaged in redlining practices, where for decades FHA insurance was often limited to newer developments outside of inner city neighborhoods, exacerbating segregation. We also know that Davis-Bacon wage requirements were designed to protect white union labor and to prevent blacks from competing for federally funded construction jobs. Even today, Davis-Bacon continues to impede lower income and minority workers from opportunities, and it drives up the construction costs for government-assisted housing. We also know that some state and local government policies have contributed to exacerbating segregation. Some zoning practices, such as prohibitions on multifamily housing and minimum lot sizes, can have legitimate purposes for many communities. However, they sometimes do great harm. They can price low-income and minority families out of neighborhoods, and they reduce the supply of affordable housing for these families. Many of the markets with the most severe shortages in affordable housing have the most restrictive regulatory barriers to housing development. In San Francisco, for example, zoning regulations may have been responsible for more than 50% of total housing costs, according to one National Bureau of Economic Research study. In my view, this history shows us that when it comes to housing in America, including housing discrimination, government has often been the problem, not the solution. And unfortunately, the Biden administration does not seem to have learned this lesson. Its new multi-trillion-dollar welfare plan with a bit of infrastructure sprinkled in seems designed to repeat many of the great mistakes of the New Deal and Great Society. After Congress has just finished spending more than $80 billion for housing in response to COVID, on top of the $50 billion we spend annually on HUD programs alone, not to mention the many billions we spend on other housing programs, then there's the tens of billions at least that we forego in tax revenue to subsidize housing. Now, in addition to all of that, the Biden administration is calling for $213 billion in new spending for housing in its so-called infrastructure plan. Amazingly, the administration wants Congress to spend $40 billion to restore public housing projects, places where people generally don't want to live. Housing projects are notorious concentrations of poverty, crime, and other social ills. And research shows that moving families out of housing projects and integrating them into broader communities decreases violent crime. But rather than focus on sensible alternatives, the Biden administration wants to keep families in housing projects. More public housing will only commit more Americans to a substandard living arrangement and increase government dependency. We also should not rush to put families in homes they can't afford. Relaxing underwriting requirements or expanding down payment assistance programs for low-income families, especially in an overheated housing market, is a recipe for disaster. If home values drop, and eventually they very well may, these borrowers run the very real risk of losing their homes and any wealth they thought they had accumulated. And we've seen this happen before. Most recently during the 2008 housing crisis, when government monetary and housing policy created a housing bubble, the bursting of which caused the financial crisis and then the Great Recession. The administration's infrastructure plan also calls for $20 billion in tax credits for building and rehabilitating homes and making them more energy efficient. These tax credits will inevitably predominantly benefit developers and investors, largely because they're not targeted to low-income families. In fact, homes built with tax credits can be sold to purchasers with income up to 140% of the area median income, not the poverty level. The administration's plan also prioritizes using union labor to upgrade homes, and this unfairly excludes lower-income, non-unionized laborers, and it increases construction costs that will inevitably be passed on to homeowners. Today, we're going to hear from two witnesses who will discuss how government intervention, even well-meaning, has contributed to inequality. Howard Hussock is a housing researcher and scholar. Mr. Hussock will note many race-conscious policies haven't actually increased homeownership opportunities or wealth in underserved communities. Public housing has deprived many minority communities of the opportunity to build wealth. The Community Reinvestment Act is out of date and poorly designed to encourage lending in minority neighborhoods, and it doesn't track whether investments actually help or hurt families. And an overly prescriptive affirmatively furthering fair housing requirements that put only a handful of low-income families in subsidized rental homes in affluent areas does little to support minority families or help them build wealth through home ownership. We'll also hear from Tobias Peter, an expert in housing finance. He notes that policies aggressively encouraging low-income or minority people to buy homes, especially during a boom when houses are very expensive, exposes borrowers to greater default risk during dips in the market. He argues that risky lending harms low-income borrowers who purchase homes when home prices are inflated, and he believes that local governments need to remove zoning restrictions and other regulatory barriers to housing that artificially constrain the supply of housing and drive up costs. It's important to remember that the legacy of discrimination is often a direct result of government-supported policies. As we consider how to address the housing challenges we face, we should not repeat the mistakes of the past. Now is not the time to double down on failed effort, and that means we should not keep American families in dilapidated and segregated housing projects, should not let bureaucrats in Washington make local housing decisions that undermine communities, and we should not inappropriately push families to purchase homes they can't afford in the long run. The lesson we need to learn and apply is, when it comes to housing in America, government has often been the problem, not the solution. Thank you, Mr. Chairman.
Thank you, Senator Toomey, for your comments. I'll now introduce the 5 witnesses. Richard Rothstein, who is testifying for Cheryl Eiffel, who could not be with us today, as a senior fellow emeritus with the NAACP Legal Defense and Educational Fund. He's also a distinguished fellow of the Economic Policy Institute, a senior fellow at the Haas Institute at the University of California, Berkeley, and author of the book, The Color of Law. Those of you who know this committee know I've recommended this book many, many times, as well as the book Evicted. Lisa Rice is the president, CEO of the National Fair Housing Alliance. I encountered her as an Ohioan prior to her work at NAFA. Ms. Rice spent 21 years at the Toledo Fair Housing Center, where she'd become president and CEO. Jason Reese is an assistant professor of city and regional planning at the Knowlton School at the Ohio State University. He previously served in multiple research positions at Ohio State's Kirwan Institute for the study of race and ethnicity, and worked with communities as a capacity builder as part of the Department of HUD's Sustainable Communities Initiative. Howard Husak, from Cleveland, as I said, is an adjunct scholar at the American Enterprise Institute. Prior to joining AEI, Mr. Husak held multiple positions at the Manhattan Institute and served as director, author, and executive education program instructor at Harvard's Kennedy School of Government. And Tobias Peter is a research fellow and director of research at the American Enterprise Institute Housing Center. Previously served as a senior research analyst with the Housing Center. Begin with Mr. Rothstein. Thank you for joining us.
Good morning, Chairman Brown, Ranking Member Toomey, and members of the committee. Thank you for this opportunity. I am, as the chairman said, Richard Rothstein, a distinguished fellow of the Economic Policy Institute and a senior fellow emeritus of the NAACP Legal Defense and Educational Fund, Inc. I am here on behalf of myself and of Cheryl Eiffel, President and Director Counsel of the LDF, that was founded in 1940 by Thurgood Marshall and separated from the NAACP in 1957. The LDF has long worked to promote racial integration and opportunity in housing. Ms. Eiffel and I have submitted written testimony that expands on my brief remarks. I am also, as you heard, the author of a book, The Color of Law, that disproves the myth of de facto segregation. In truth, we are residentially segregated, not naturally or from private bigotry, but primarily by racially explicit federal policies of state and local as well, designed to prevent African Americans and whites from living as neighbors. These 20th century policies were so powerful that they determine much of today's residential, social, and economic mobility. Because powerful government policies segregated us, racial boundaries violate the 5th, 13th, and 14th Amendments. Our nation thus has a positive constitutional obligation to redress segregation with policies as intentional as those that segregated us. The federal government made housing and home ownership critical to families' economic stability and upward mobility, but we routinely excluded blacks from government benefits that propelled whites into the middle class. Perhaps government's most powerful unconstitutional policy was the Federal Housing Administration's guarantee of developers' bank loans to suburbanize the city-dwelling white working class and returning World War II veterans into single-family homes in all-white communities, creating a white noose around black city neighborhoods. The homes were affordable, about $100,000 of today's dollars, to both black and white veterans and urban residents who had jobs in the post-war boom. But African Americans were prohibited by explicit policy from participating. This was not done by rogue bureaucrats at the FHA or Veterans Administration, an agency that followed FHA policy. It was spelled out in the FHA's underwriting manual, distributed to appraisers who evaluated builders' applications. The manual said a proposal could not benefit from federal subsidy if it included African Americans in a white project. The manual even required denial of loans for all white projects located near where black families lived, because that would, quote, risk infiltration by inharmonious racial groups. This notion of de facto segregation is utter nonsense. These inexpensive, federally subsidized, whites-only homes now sell for $300,000, $400,000, in some areas $1 million or more. Whites gained wealth from equity appreciation and used it to send children to college, to finance short-term layoffs or medical treatment, to enhance retirement, and to bequeath wealth to children and grandchildren who then had down payments for their own homes. African Americans were prohibited by explicit federal policy from doing the same. Today, Black family incomes are about 60% of white incomes. You'd think Black wealth would also be about 60% of white wealth. Households can save the same amounts from the same incomes. But in reality, Black wealth is only about 5% of white wealth. That enormous disparity between a 60% income ratio and a 5% wealth ratio largely results from unconstitutional federal policy that we have an obligation to remedy, one we have never embraced. Another federal policy to segregate us was public housing, something we now think is for the poor. But it began in the New Deal for families who remained employed and could pay full rent. Government built it to meet a housing shortage, but did not subsidize it. Yet government segregated it, creating separate projects for whites and blacks, frequently segregating previously integrated neighborhoods. The great African-American poet, novelist, playwright Langston Hughes wrote in his autobiography that he lived in an integrated downtown Cleveland neighborhood. In high school, his best friend was Polish, and he dated a Jewish girl. It was an integrated school in an integrated neighborhood. But the Public Works Administration cleared part of it to build separate projects, one for whites, one for blacks, creating segregation where it hadn't existed. This policy was followed nationwide, creating segregated patterns that persist today. It was only after whites were subsidized to leave public housing for all white suburbs that public housing became almost all black. When industrial jobs disappeared from cities, residents no longer had access to good jobs and required subsidies. Contemporary land use has been layered atop an infrastructure created by decades of racially discriminatory policies. Failure to remedy these injustices has created multiple crises. Home ownership is out of reach for many, renters are overburdened by costs, wages are inadequate for housing costs in many cities, affordable public housing is scarce, and housing infrastructure is neglected. These issues remain at the core of our nation's inequality. Bold federal action to ensure equal opportunity in home ownership and affordable housing is long overdue. This body can ensure that our housing infrastructure finally reflects the non-discriminatory and inclusive vision of the Fair Housing Act. Thank you very much.
Thank you, Mr. Rothstein. Ms. Rice, welcome.
Chairman Brown, Ranking Member Toomey, and other members of the Senate Committee on Banking, Housing, and Urban Affairs, on behalf of the National Fair Housing Alliance, thank you for inviting me to speak today about the history and current state of housing discrimination. Our mission is to eliminate all forms of housing discrimination and ensure equitable housing opportunities for all. NAFA is also the trade association for over 200 fair housing organizations throughout the United States. Many of the economic challenges facing our nation, the racial wealth, income, and home ownership gaps, the racial health disparities that pre-existed and are exacerbated by the COVID-19 pandemic, educational and employment gaps, inequities in credit access, and other disparities have their origins in discriminatory housing and economic policies implemented from the colonial period through present times. Throughout U.S. history, people of color have been restricted from owning land or homes. Federal laws and policies, as well as private market practices, created residential segregation, the dual credit market, institutionalized redlining, exclusionary zoning policies, and other structural barriers that lock people from opportunities to advance in life. These systemic barriers have never been eliminated. They are still with us. U.S. neighborhoods are more segregated today than they were 100 years ago. Consumers of color are still denied for mortgage loans at twice or more the rate of white borrowers. The Black-white homeownership gap is as wide today as it was when redlining was legal. And without interventions, people of color will never reach economic parity with white residents. Because of these structural inequities, where a person lives can make all the difference in their lives. Your address impacts everything about you. In fact, your zip code is a better determinant of your health than your genetic code. Neighborhoods of color are more likely to have poorly resourced schools, fewer amenities like healthcare facilities, grocery stores, green spaces, and bank branches. But these communities of color are more likely to have hazardous toxic waste plants, as well as polluted land, air, and water. There are over 4 million instances of housing discrimination that occur each year. And unfortunately, most of these go unreported. But I want to give you a sense of the cases that do come through our doors. In New York, a young Asian American woman taking her trash out had acid thrown in her face, causing serious injuries. In Alabama, we're working with our members to assist victims of sexual assault, including a woman who was raped by her landlord and who got no assistance at all from law enforcement when she reported the incident. In Tennessee, we recently settled a redlining case in which a local lender failed to serve Black residents in Memphis. In Maryland, we are currently investigating an appraisal bias case in which an appraiser stated that an affluent Black community in Prince George's County could not sustain a high-income housing development, stymieing a multi-million-dollar project. NAFA recently filed a major lawsuit against Redfin, alleging systemic real estate sales discrimination in Philadelphia, Kansas City, Baltimore, Chicago, Milwaukee, Louisville, Memphis, Long Island, and Essex County, New Jersey. NAFA and its members are addressing discrimination manifest in algorithmic-based technologies used in the housing and financial services space, including the use of tenant screening, risk-based pricing, credit scoring, digital marketing, and automated underwriting systems. When thinking about solutions to overcome housing and lending discrimination, we must consider the extensive resources this nation has invested in creating a deeply inequitable society. Thousands of laws, ordinances, and policies have been passed that either explicitly were race-based, such as the Indian Removal Act, the Chinese Exclusion Act, and Jim Crow laws, or laws that were implemented with racialized policies, such as the Federal Highway Administration Act and the Homeowners Loan Corporation Act. This nation has spent hundreds of trillions of dollars implementing unfair policies, which created deep-seated racial inequality that we see today. It is therefore imperative that federal government now support equitable investments for marginalized groups. Discrimination is crippling this nation. Research shows that if we eliminated racial inequality, the US GDP would increase by $5 trillion over a 5-year period. So it is in our collective interest to expand opportunities for marginalized groups. And I thank you for allowing me to share with the committee.
Thank you, Ms. Rice. Mr. Reese, welcome, and you're recognized for 5 minutes.
Chairman Brown, Ranking Member Toomey, and members of the committee, thank you for the opportunity to testify today on the legacy of racial discrimination in housing. I commend you for hosting a hearing on this important topic and elevating the issue of housing equality as a top priority of this committee. I'm an assistant professor of city and regional planning in the Knowlton School at The Ohio State University. My 2 decades of teaching, research, and scholarship have focused on city planning history, land use policy, and their implications for racial and social equity. Contemporary housing segregation often correlates with isolation into neighborhoods that lack critical opportunity structures, such as strong schools, healthy environments, and economic resources. Research by the Diversity Data Kids Initiative at Brandeis University has found that nearly 1 in 2 African American children and 1 in 3 Latinx children are disproportionately isolated into the most unhealthy and under-resourced neighborhoods in our nation's largest metropolitan areas. These disparities are even more pronounced for low-income African American and Latinx youth. Segregation in our housing market was not a natural occurrence, but enforced by a systemic arrangement of policies and practices throughout the 20th century by both the private and public sector. Local practices such as racial zoning, racially restrictive covenants, exclusionary zoning, and expulsive zoning all played a role in enforcing segregation into the early 20th century city. These existing patterns of segregation created by local practices would be reinforced by redlining practices and housing policies emerging from the New Deal. Redlining of urban neighborhoods would produce decades of disinvestment, while FHA guidelines mandated racial separation in the rapidly growing post-World War suburbs. Post-war policies such as urban renewal and the Federal Highway Act would further damage redline urban neighborhoods, causing widespread disruption and displacement. Landmark civil rights legislation, such as the 1968 Fair Housing Act, have helped open housing markets, but segregation persists. For example, the Federal Fair Housing Act has been effective at reducing private discrimination in the market, but has been unable to counter ongoing exclusionary land use policies. The legacy of discrimination has a direct impact on the challenges facing the housing sector, cities, and our society. Research has linked these historic policies to depressed wealth, health, and housing outcomes for marginalized communities today. 3/4 of the formerly redline neighborhoods from the 1930s are low to moderate income today. Historic patterns of redlining have been associated with the increased risks for predatory lending and foreclosure during the 2008 housing crisis. Studies have documented the relationship between historic redlining, contemporary social vulnerability, income, and also gun violence. New studies emerging from public health indicate historic redlining can be linked to a number of contemporary health challenges. Redlining has been empirically linked to disparities in preterm birth, cancer, infant mortality, and life expectancy. Many policy innovations and reforms could proactively counter the legacy of segregation on the housing market. Federal leadership and investment are needed to support communities and local governments who are attempting to grapple with these challenges. Leadership is needed in building capacity, fostering collaboration, fostering local innovation, while assuring protection of civil rights. Federal leadership could be beneficial in aligning critical infrastructure investments, supporting the implementation of fair housing programs, and fostering regional planning activities. Many of the policy tools needed to counter the legacy of discrimination exist, but need to be brought to scale. For example, recent programs such as the U.S. Department of Housing and Urban Development's Housing Choice Voucher Mobility Demonstration could be expanded to assist local housing authorities in providing better access to safe and healthy neighborhoods for voucher holders. In addition to housing mobility, direct investment is needed in formerly redlined communities. Proposed federal programs, such as the formerly introduced Livable Communities Initiative, could be transformative in sparking the synergistic investment in infrastructure and affordable housing needed for neighborhood transformation. Metropolitan housing markets are most effectively planned for through regional planning strategies. Regional housing approaches can align local government land use regulations and help reform local exclusionary housing policies. Regional planning is critical to build consensus, build capacity, and develop strategy among multiple local governments. Programs such as the Regional Planning Competitive Grant Program from the HUD Sustainable Communities Initiative could be reintroduced to support the capacity for regional planning. In conclusion, housing is a critical form of infrastructure serving families, neighborhoods, and regions. Stable housing and healthy neighborhood environments are critical to family well-being and child development. Efforts to reduce contemporary discrimination in the housing market and directing investment into historically disinvested neighborhoods provides an investment into the next generation of American society, supporting equity, but also improving the nation's health, wealth, and economic competitiveness. Thank you for the opportunity to testify today. I look forward to your questions.
Thank you, Mr. Reese. Mr. Husak, welcome.
Thank you. Chairman Brown, Ranking Member Toomey, and distinguished members of the committee. It's a special honor to testify before the senator from Ohio, the state where I was born and raised. That the United States has been marked by an ugly history of race-related housing discrimination is beyond dispute. Private deed restrictions barred African Americans from buying or renting in neighborhoods of their choice, including such iconic American places as Levittown. Government policies reinforced and encouraged such bias, as with the redlining policies we've discussed. A new direction was set by the landmark Fair Housing Act of 1968 and its key guiding assumption that race discrimination should not preclude any American household from buying or renting a home it can afford. We reversed course from what might be called negative discrimination. But the history of government efforts to combat the effects of racism in housing policy have also included what can be called positive discrimination policies, government interventions in the marketplace conceived to help racial and ethnic minorities. I'll discuss the historical evidence as to how and whether such policies have worked and how they might be modified today. The first such broad intervention was public housing, initiated as part of the New Deal. What was meant as government benevolence did not turn out that way. In Detroit, as well as Chicago, St. Louis, Pittsburgh, Cleveland, and elsewhere, historic African-American neighborhoods were bulldozed to make way for explicitly racially segregated public housing. That meant the clearance of hundreds of Black-owned businesses and owner-occupied homes. In Detroit, the new Bethel AME Church, where Aretha Franklin first sang and her father preached, was torn down. So too was Pittsburgh's Hill neighborhood, immortalized in the plays of August Wilson. These neighborhoods were repositories of African American wealth, small but growing. Perhaps more importantly, they were also communities in which wealth accumulation was possible. In contrast, ownership in public housing is a contradiction in terms. That has unfortunately played a role in the tragic lag in wealth described earlier. And of course, much of the original public housing stock has rapidly deteriorated and was itself bulldozed with no compensation for residents. The well-intended but misguided policy to set public and subsidized housing rents at 30%. It's no longer clear that absent regulation, bank redlining would persist, but there is reason to believe that such positive discrimination as the CRA can harm the prospects of those it sets out to help. A 2013 National Bureau of Economic Research paper found that loans made in the run-up to CRA exams defaulted by about 15% more often than those in other periods. My concern is not for the profits of the big banks, but rather about the minority homeowners who find themselves living on a block where homes have gone into default and foreclosure. Consider as well the Affirmatively Furthering Fair Housing Initiative, an understandable response to the fact that too many of our municipalities have adopted draconian zoning laws. But the emphasis of AFFH on using federal HUD funding as a stick to force the construction of more subsidized rental housing aimed at increasing residential racial diversity precludes the household wealth appreciation gained through property ownership. And it can benefit developers more than low-income housing households. A University of California at Berkeley study has found that low-income housing tax credit finance construction in that state costs $480,000 per unit. That's a lot of infrastructure. In conclusion, there are 3 policy changes I will leave you with. Let's consider more imaginative approaches to improve public housing than simply spending more. For instance, buying out public housing tenants, financed through the sale of those properties that are on valuable sites. Let's permit fixed rent leases for public and other subsidizing housing tenants so they can accumulate wealth. Second, include regular loan performance reviews specifically for CRA qualified lending and make clear to lenders that performance, not just the extension of credit, matters. And let's use HUD to provide models, not mandates, for local communities to reform zoning in ways that will accommodate a wider range of missing middle income groups without subsidies. These approaches will effectively provide vehicles of opportunity for those of all races, but especially minorities who have been harmed by the history of ill-conceived government assistance policy. It's an honor to testify in front of you, and I look forward to your questions. Thank you very much.
Thank you, Mr. Husak. Mr. Peter, welcome. You're recognized for 5 minutes. Thank you.
Chairman Brown and Ranking Member Toomey, thank you for the opportunity to testify today. Many of the housing problems we face today as a nation have occurred not in spite of federal policy, but because of them. 2 policies in particular have been major contributors to the separate and unequal housing legacy we find ourselves in today. Racial discrimination and residential zoning policies espoused by the federal government may be traced back to 1921, and foreclosure-prone affordable housing policies back to 1954. These 2 policies continue to contribute to disparate outcomes and put low-income and minority borrowers needlessly in harm's way and severely limit the opportunities to build generational wealth. Zoning policies espoused by the federal government and widely adopted around the country have constrained the private sector's ability to build adequate housing, thus fueling housing unaffordability. Starting in 1921, one-unit detached zoning policies become widespread through the actions of the federal government, justified as actions promoting health, safety, morals, or the general welfare. They were in fact thinly veiled efforts to promote racial segregation of residential development. These policies have created an artificial supply shortage. We estimate without these policies an additional 8 million homes would have and can still be built without subsidy by private enterprise. The supply shortage has resulted in higher home prices, higher rents, and greater levels of debt in order to become a homeowner. Worsening affordability has severely affected how low-income households, especially Black ones, by severely restricting the opportunity to sustainably purchase a home. Foreclosure-prone affordable housing policies began in 1954 when Congress authorized FHA to use the 30-year loan. These policies have been primarily targeted at low-income and minority borrowers and have subsidized debt by providing excessive leverage and have not built wealth. Coupled with the supply shortage and the increased demand from additional leverage has fueled unsustainable lending and higher home prices. This is the paradox of affordable lending. When supply is constrained, credit easing will make entry-level homes less, not more affordable. During the financial crisis, these policies contributed to 8.7 million of foreclosures and other forced disposition, which were 1.5 times higher in low income and 2 times higher in minority neighborhoods than in high income or more white neighborhoods. Today, the nation finds itself in the midst of a second home price boom in less than a generation. The national sellers market is now in its 101st month, and levels of supply are at record lows. Home prices are rising in the 10 to 15% range compared to a year ago. Home price appreciation is being propelled by the Fed's low interest rate policies and quantitative easing, the desire for more space as more people work from home, and the white credit box, particularly at FHA. Across the states you represent, affordability has worsened, especially for low-income and minority households. You can trace just how bad affordability has become from key housing market indicators on your state you can find in the appendix. The COVID-19 pandemic has revealed the same fault lines that were present before the financial crisis, thus maintaining separate and unequal outcomes in the housing market. Delinquencies are still largely geographically concentrated in low-income and minority neighborhoods where federal policies provide widespread access to default-prone leverage. Most importantly, these federal policies have impeded the creation of generational wealth for lower-income and minority households and have served to perpetuate the legacy of racial discrimination and socioeconomic stratification in housing. Due to their ongoing impact, there's a growing danger that housing is going to become even more separate and unequal. This is not a viable path forward. While there are unfortunately no quick fixes to correct zoning and affordable housing policies that have over decades helped to create a separate and unequal housing market, following represent sensible policy solutions. First, as you are now considering new affordable housing proposals providing hundreds of billions of new funding, you must be wary of government programs that promise an easy fix. Many poorly designed housing assistance programs have had many unintended consequences, which have helped to make housing separate and unequal. Second, a sounder approach for the federal government's involvement in single-family financing would be to focus on wealth building, not debt. Specifically, shorter loan terms would sustainably build generational wealth for low-income and minority households through homeownership. To make these loans attractive, government assistance could be narrowly targeted to lower-income first-generation home buyers so that they can build wealth. Third, state and local governments can greatly expand supply by unleashing the private sector by restoring property owners taken away by federal policies dating back to 1920s. Fourth, identify and prosecute bad actors that propagate racial discrimination using sound data analysis developed by the AI Housing Center, while allowing others to defend themselves using the same approach. This test requires no new data collection, and we stand ready to help HUD or the CFPB to implement it. And finally, fifth, provide and support economically sound opportunities for income and wealth growth for lower income people. Thank you very much.
Thank you so much, Mr. Peter. Let me begin the questions with Ms. Rice. Infrastructure investments in the past, Ms. Rice, like FHA and construction of the federal highway system, created jobs, helped drive economic growth. They only benefited some communities, however, they explicitly, as we know, excluded or directly harmed lower wealth communities and communities of color. Ms. Rice, how do we ensure that new investments in infrastructure help promote broad-based economic growth while addressing economic and racial inequalities and inequities both?
Thank you for the question, Senator Brown. So the first thing that we have to do is first understand that infrastructure is housing. I mean, when you think of all of the infrastructure bills that the nation has passed in the past, those infrastructure bills had a great impact on people's ability to sustain their housing. It disrupted home ownership opportunities for many communities of color. And it actually helped create residential segregation. So we have to keep that in mind when we're implementing this particular infrastructure bill. And one of the things that we are pushing for at the National Fair Housing Alliance is to sort of cloak the entire infrastructure bill, if you will, in a patina of equity. So we're arguing that the affirmatively furthering fair housing mandate should be applied to the entire infrastructure bill so that we are implementing all of these programs and investments in a very equitable fashion. The other thing is the infrastructure bill has to include both supply side and demand side provisions. So you can't just build up housing opportunities without ensuring that people are going to be able to adequately access them. And if we negate the reality, if we excuse the reality that families of color are not in the same position because of historical and current discriminatory practices to access affordable housing options, then we're going to be exacerbating inequality, much like the CARES Act that was implemented in the beginning of the COVID pandemic has worked to exacerbate inequality because it was not implemented through an understanding of the inequalities that currently exist in our nation. So if we don't want to repeat that kind of exacerbation of inequality in our nation, we have to make sure that the infrastructure bill is taking into consideration that we have a very uneven landscape and not everyone has access to opportunity. So we need to pay attention to both the supply side and the demand side issues.
Thank you, Ms. Rice. Dr. Reese, you've helped communities engage in comprehensive planning efforts involving housing and transportation. Who needs to be at the table? If you briefly tell us who needs to be at the table to make sure that these plans work for the neighborhoods. Your sound's not on. We still can't hear you. Let me come back to you, and if there's what's on our end. Apparently that's on our end. What's that? Okay, hold on. It's on his end. Okay, it is on his end. Okay, sorry about that. Let me move. Sorry about that, Dr. Reese. Let me move to Mr. Rothstein. You wrote an entire history, as we've cited, of the government's role in creating and perpetuating segregation in our housing markets and the federal government's obligation to provide redress. For those who might be skeptical, explain why the government has an obligation to remedy the harmful discrimination that it perpetuated. And we can't hear you either. Is there a problem? Now we can hear you, Mr. Rothstein. Okay.
Yeah, sorry.
Thank you.
In the first place, we have a constitutional obligation to do it, no matter how difficult it is, because as we've discussed, the policies that created segregation were heavily dominated by federal, state, and local government policies, a violation of the Constitution. And we have an obligation as Americans, difficult though it may be, to remedy that, not just to let it take care of itself. That's the first reason. The second reason is so much is being made of unintended consequences. Of course, there are unintended consequences of everything we do, and we have to be careful to avoid them. But that can't be a reason to paralyze us from doing anything. One of the things we should do is impose a disparate impact standard on everything that we do under this infrastructure bill so that we make sure that the policies that we enact don't have a disparate impact on African Americans and on other minorities in an unintended way. For example, just a few years ago, the present governor of Maryland took office and canceled a light rail project that was going to bring African Americans in a low-income neighborhood of Baltimore, give them access to good jobs, to good shopping opportunities, to residential opportunities, and redirected that money to highways that would help speed the travel of commuters from suburban areas into the center city. That had a disparate impact on African Americans, that policy choice. It wasn't intended as a racially explicit policy, but we need to impose a disparate impact standard on it and on all the policies that we enact. I think that we should legislate the disparate impact standard into the Fair Housing Act, because leaving it to rulemaking, as we've seen over the last decade, is subject to politicization and to repeal and not be effective. So we have to implement policies that we're obligated to do under the Constitution. We can't use the fact that there may be occasional unintended consequences as an excuse to do nothing. The federal government was very powerful in implementing segregation. The fact that it was so powerful in doing it suggests that if it's intended in the right way, it can be equally powerful in desegregating.
Thank you, Mr. Rothstein. And Professor Reese, we will come back to you later since my time has expired. And if we can't get back to you later, we'll talk directly about your answer. Senator Toomey is recognized.
Thank you, Mr. Chairman. Let me start with Mr. Husak. Actually, several people have observed that African-American home ownership rates have not improved since, I don't know, the late 1960s or thereabouts. So we've had 50 years of programs, and you went through some of the failings we've had with the public housing system and how that has failed and how rent regulations have failed, and the CRA has certainly at least become obsolete. So, and literally, truly trillions of taxpayer dollars spent to subsidize housing in various ways over recent decades. And yet, zero progress on a very important metric, Black home ownership rates. Is this pretty damning evidence that these programs haven't worked, in your view, Mr. Husak?
It's very suggestive, certainly, Senator Toomey. And I think we have to not look for the big, quick fix. We have to accept the idea that the best progress is sustainable progress, and that can be incremental. Here's what I'm talking about. The FHA, still today, a very powerful force in the American government, requires a 3% down payment. Well, low down payments seem like you're doing a favor to the homeowner, but they actually may, as you said in your opening remarks, qualify people for homes they can't afford. Foreclosure and delinquency rates in FHA financed homes remain extremely high today compared to those in the private market, the straight private market. That's not something that we should accept. It's a worry, and that resounds through the CRA and other efforts to shoehorn people into home ownership. Let's make sure home ownership is sustainable, and that way it will improve in the long term.
There's no question we see a correlation between home ownership and favorable socioeconomic outcomes. But does that mean that there's a causal direction starts with home ownership? And if we put people in homes they can't afford, we're going to still get the favorable socioeconomic outcomes that we'd like to see?
No, I actually compare it to the discussion about moving to a better zip code. We have to make the right life decisions in order to move up in the world. That's the fact of American life. And one of the big life decisions we make is to save money for a down payment for a home so that we don't have a large overhanging principal, so that when home values go down, as they inevitably do, as you pointed out in your opening remark, we're not caught in the downdraft. So the good life decisions that allow people to accumulate wealth, whether by moving to a higher valued neighborhood or just having the down payment to move where they can buy, those are what we need to encourage.
So I want to develop that, but I just want to close out on this. Spending a whole lot more money on the programs that have given us zero progress doesn't sound like a great recipe to me. Mr. Peter, you made a point that's very related to what Mr. Husak just said, which is the idea of focus on wealth building instead of debt building. Isn't it true that a lot of well-intended programs have really been designed to encourage people to take on more debt than they can afford, which has ended very badly for those very people that were meant to benefit? If we had programs designed to help people encourage accumulation of savings and wealth, wouldn't they be a lot better off?
Thank you, Senator. It's an excellent question. And yes, I mean, since 1954, it's been federal affordable housing policies have been to subsidize debt by providing excessive leverage. And my colleague, Howard Husak, just mentioned a couple of examples. At FHA, where today the median debt to income ratio is 45%, FHA goes as high as 57%. Many of FHA, many of the loans get risk layered on top of each other with risky features. So there's certainly, this has been the policy since 1954, and the outcomes don't show for it. A much better, much sounder approach would be to add to wealth building, and the way to do that is because the way to achieve that is to focus on shorter loan terms. Don't get absorbed into, don't end up driving home prices higher and higher, but they end up providing sustainable wealth building, which is what we want.
And then I've got very little time left, but Mr. Husak, I wonder if you could elaborate a little bit on an interesting idea that you alluded to, which is the idea of maybe selling off public housing that's on very valuable land and using the proceeds from that sale to do a lot more to help the folks who would be displaced than keeping them there.
Yeah, there are, in New York City, there's housing developments on some of the most, billion-dollar lots on the Brooklyn waterfront and Lower Manhattan. At least they used to be worth billions before the pandemic. We think they'll come back, and they will, in fact. And rather than giving people a housing voucher and saying, try to use it somewhere, let's pay them for exactly the kind of wealth accumulation they missed out on for 40 years. 10% of New York City public housing tenants have lived there for 40 years or more, not accumulating wealth. Let's buy them out with the proceeds from these extremely valuable real estate sites and let them go use that where they would.
Thanks very much. Thank you, Mr. Chairman.
Thank you, Senator Toomey. Senator Reed is recognized from Rhode Island for 5 minutes.
Thank you very much, Mr. Chairman. And let me direct a question to Ms. Rice and Professor Reese, and it's a very basic one. When it comes to addressing housing discrimination, would the private sector on its own produce the most efficient and fairest outcome in your estimate?
Sure, I'm happy to go first, and thank you, Senator Reed, for the question. The answer is no, unfortunately, and we have seen this throughout history. There is this sort of argument that we've been hearing, that government should sort of stay out of the way because the private market can handle things on their own. I'd like to lift up 2 examples of why that's not the case. First, the argument essentially says that it was all right for the federal government to invest trillions of dollars implementing policies that were equitable for and supported white communities in a very racialized manner. That was just fine. Supporting white families to make it into the middle class was just the thing to do. But investing dollars in equitable policies to support communities of color is somehow wrong. I think it's a very racist construct to argue that the policies and programs that benefited white residents would not, in fact, benefit people of color and should continue to be disclosed for them. The argument, I think Senator Reed ignores, that the white community is where it is now on the economic ladder because our government supported, from colonial period to today, supported their ability to secure land, housing, and businesses. The argument suggests that supporting communities of color in this way is somehow wrong, and I think that's clearly separate and unequal. The second example I'd like to lift up is the importance of the government's role in supporting anti-discrimination actions. The first Fair Housing Act was actually passed during Reconstruction in 1866. That law was almost never used, Senator Reed. And that law was never used because people feared violence and retribution if they were to exact their civil rights protections. But when the Fair Housing Act was passed in 1968, bringing with it the full weight of the Department of Justice and the Department of HUD, we saw thousands of victims of discrimination come forward because they had the support and backing of the federal government. So policies implemented in a way to advance justice and fairness are necessary.
Well, thank you very much. Dr. Reese, do you have a comment?
Yes, I wanted to come back to Senator Brown's question about moving forward in terms of the benefits of comprehensive planning to address these issues. I wanted to state that the planning profession still has its place in regards to aligning our infrastructure in an efficient way, avoiding land use conflicts, and building the capacity and the consensus needed to guide the development of cities moving forward with the macroeconomic changes that we know are coming. We have learned from the painful history of the past in terms of these past practices that we've talked about. And our profession has evolved considerably since then, placing great emphasis on engaging marginalized community and centering their voices in the context of how we plan for the future. This is why I believe planning still has a very profound role in terms of thinking about how we guide our infrastructure investments forward, as well as how we address these ongoing housing challenges facing many communities of color. Thank you.
Well, thank you very much. And my time is dwindling down to a few seconds. So, Mr. Chairman, I'll yield back to you. Thank you.
Thank you, Senator Reed. Senator Scott from South Carolina, who may or may not be on. If not, Senator Rounds of South Dakota, you're recognized for 5 minutes.
Thank you, Mr. Chairman. Ms. Rice, I'd like to begin with a question for you. One of the areas where housing needs are most acute are on tribal lands in South Dakota and across the country. Native American reservations have a housing stock that has suffered a severe underinvestment that stretches over decades. Now, one of the reasons for that is because we have what we call tribal trust land, in which the government holds in trust the land which belongs to the Native Americans. But when it comes time to build a home, showing that you actually have ownership or the ability to own the land and thus the location where the home is, becomes rather challenging. And there are limited numbers of financial institutions that have expertise in working through that particular issue. But this is an item that has literally been there for decades. Where do you think Congress should start when it comes to improving housing conditions for Native Americans? And I'm going to ask you a follow-up when we're done, but just to start things off, can you give me your thoughts about, these are rural areas, and so they're different than a lot of the rest of the country, but to me, this is critical for a population that really does have a very high level of poverty.
Senator Rounds, thank you for that question, and it's a very important one. So as you noted, there are a handful of lending institutions that have mastered the process for providing mortgage credit on tribal lands. And unfortunately, we haven't had a regulatory framework in which our financial regulators have used the carrots that they have in order to incentivize lenders to do more in this space. So there are a couple of things that we are actually championing. One is the use of a program called Special Purpose Credit Programs. Now, this is a program that has been on the books for decades. It is a construct of the Equal Credit Opportunity Act, but it's really never been used. It's similar to affirmatively furthering fair housing, right? We've never had implementation of the affirmatively furthering fair housing provision of the Fair Housing Act, and so we haven't realized the benefits that the law really holds. So it's the same thing with the Equal Credit Opportunity Act. Because we haven't had really usage of the Special Purpose Credit Program provision, we haven't seen the full scale of its benefits. So we are really encouraging the Department of Housing and Urban Development to work co-jointly with the CFPB and the prudential regulators to issue more guidance to give lenders a higher degree of confidence to create and implement special purpose credit programs, which can be designed specifically for serving Native American populations.
You know, I'd like to follow up a little bit on that, because I'd like to know whether or not you think there are items specifically with regard to the HUD Section 184 loan guarantee program that might be improved upon for this particular one? Because that's really a native-focused housing program. Are you familiar with it? And are there some things that we could do specifically with that particular program?
Senator Rounds, unfortunately, I am not very familiar with that particular program, but I do know that special purpose credit programs can be used with any federal mortgage program. So they can be used with VA, they can be VA loans, USDA loans, FHA loans, and I'm sure that they can be used with this loan product that you just mentioned. Again, there's severe underutilization of the special purpose credit program, but it is specifically designed, it was put in place to meet the special credit needs of marginalized and underserved communities, and Native American populations are ripe for that opportunity.
Thank you for that. And I noticed that you mentioned the VA program. I have to recall that I think it was either 2016 or 2017. The Minneapolis-based office, which is responsible for several states for VA loans on Native American reservations, the Minneapolis office was given an award for having the highest number of VA awarded mortgages in the nation. They had 5. Now think about that in terms of the failure of our country to provide those types of loans to Native American veterans. And so I do think that there are some things that we can work on that. And I just, but thank you very much for your thoughts with regard to that. And I see, Mr. Chairman, I think I've got a little bit of time left.
You really don't, but go ahead anyway.
Well, then let me just say this. Thank you for doing this particular item. And I think that this is an area that we can find some bipartisan agreement on with regard to improving housing programs that were well intended, but that may very well need just kind of a review to make sure that they're actually doing what they were supposed to do in the first place. Thank you, Mr. Chairman.
Thank you, Senator Rounds. And I, as a member of the Veterans Committee, I will be in touch with you and your office on the issue you just talked about with Native American veterans. So we'd love to work with that on housing. Senator Menendez from New Jersey is recognized for 5 minutes.
Thank you, Mr. Chairman. Black and Latino households are more likely than white households to live in poorer and disadvantaged neighborhoods. As Congress considers an infrastructure package, we have an opportunity, I believe, to help address racial disparities in access to affordable housing and economic opportunity by targeting aid to low-income communities. And I believe the best way to do that is with a package that spurs development and investment in underserved communities by coordinating housing and transit development so our communities can improve economic resiliency. Dr. Reese, would an infrastructure package that provides specific investments to low-income communities help address some of the racial disparities present in affordable housing and economic opportunity?
Thank you for the question, Senator. Absolutely. We know that the alignment of transportation infrastructure and housing is critical, primarily in the context of allowing greater workforce mobility. But in addition to that, it helps us think proactively in terms of understanding that with these transportation investments that we may see, particularly in our urban neighborhoods, property values are going to go up, and we can potentially stabilize housing to make sure that those neighborhoods stay affordable and accessible. I'm here in Central Ohio, where our regional planning agency right now is trying to think about how to prioritize higher density transportation development along our arterial corridors and also preserve affordable housing. A program like this would be actually transformational in moving ideas like this off of the books in terms of planning and into implementation.
Well, thank you. So then it would be fair to say that you think including coordinating fair housing and transit development that expands housing opportunities and transit access to good paying jobs as part of an infrastructure package would help these racial disparities.
Absolutely.
And that's exactly what my Livable Communities Act does, which would authorize new programs on how to promote smart development and regional planning for transportation and affordable housing, especially to better integrate affordable housing availability and access to transit, access to job opportunities. So I look forward to hopefully working with the chairman on that. Thank you. Let me ask Ms. Rice, home ownership, we know, is one of the most effective ways for low and middle income families to build intergenerational wealth. The Federal Reserve tells us that the median homeowner has about 40 times the household wealth of a renter. The Census Bureau data tells us that as the fourth quarter of 2020, only 44% of Black families, 49% of Hispanic families own their homes, compared to 74% of white families. So, Ms. Rice, federal data shows that the median white family has 8 times the wealth of the median Black families. Does the home ownership gap contribute to this wealth gap?
Yes, Senator Menendez, absolutely it does. In fact, the homeownership gap is the major driver of wealth inequality in the United States. And so that's why it's imperative that we adopt programs that help expand homeownership opportunities for people of color. And I do want to make a point here. Because in the lead up to the Great Recession and the foreclosure debacle, the kinds of loans that we saw to and hyper targeted for communities of color were toxic mortgages that were not designed to be sustainable. And that's critically important. In fact, over 50% of African Americans and 50% of Latino Americans got loans in the subprime market. They got these really horribly crafted subprime loans in order to purchase their housing. The point I want to make is that that's always been the case in the United States, right? There has never been a time in the United States when the primary mainstream financial market has been the primary provider of credit
Yes.
to communities of color because of this legacy of discrimination and these systemic inequalities that we've been talking about, the dual credit market and so forth and so on.
Yeah,
So it's important to keep that in mind.
And we certainly want responsible borrowing, but we also want the ability to create that responsible borrowing to take place. But at the end of the day, we see that the wealth gap isn't static, it widens over time. One final question to Mr. Rothstein and Ms. Rice. If owning your home is part of wealth building, but also if homes are properly appraised and valued, a Brookings Institute report from 2018 shows that home values in majority Black neighborhoods are 55% lower than homes in less than 1% Black neighborhoods. So how does this systemic undervaluation happen, and what are the consequences to African-American households?
Well, thank you, Senator. Let me begin by saying that
The 2 Republicans on this thing is.
oh, shall I go on? Yeah.
Yes, please.
Yeah, please proceed. Senator Scott,
thank you.
Yeah.
Yeah, thank you. First, let me say that home ownership is a critically important thing to maximize. People who own their own homes have more pride in their communities. They take better care of their neighborhoods. They are more invested in their local schools. So nobody should minimize the importance of increasing ownership that is presently denied to African American families. But we should also be careful not to over-exaggerate the effect that home ownership has in wealth creation. Historically, African Americans who have owned their homes have gained less wealth from them than whites who've owned their own homes, because African American neighborhoods appreciate and value less than white neighborhoods do. It's certainly true, and I said this in my comments earlier, the wealth gap that we have today is largely created by discriminatory federal home ownership policies. But that's not the only thing that sustains it. We should not forget that if we want to increase wealth of African American families and other minority families, we should enable them to save from decent incomes. Income policies is critically a contributor to home ownership and to wealth, rather. It's an important contributor to wealth creation, as housing policies are. And we shouldn't silo our attention to the housing and income policies when we're talking about wealth creation. We can narrow the wealth gap if we give families enough income to save from, the way white families do as well. So far as the appraisal issue goes, you're absolutely right. This is one of the things that a disparate impact, well-enforced rule could address. But many people confuse appraisal and assessment. And one of the critical problems that we now face, and I'm sure you've seen all the attention given to it in just the last few weeks as a result of a very important report that was issued by a political scientist at the University of Chicago, Christopher Berry, showing that systematically across this country, African Americans, because of discriminatory, in effect, assessment policies, pay far more in property taxes than whites for homes of similar value. This is the results, the causes of this are obvious. So for one thing, because as I said, African American neighborhoods appreciate less rapidly than white neighborhoods in value. If you don't do a regular assessment, and many communities don't do it, they delay their assessments over time. White homes market values are going to be much higher than their assessed values, while Black home market values are not going to be so much higher. The result is that African Americans are paying much higher property taxes to support schools and fire departments and other public services than whites are. These are not racially explicit policies. They're policies that across the country, the Berry report documents 1,800 counties and cities in which African American neighborhoods, low-income neighborhoods, pay higher property taxes relative to market value than white property taxes. Unless we begin to impose a disparate impact standard on the assessment practices that are imposed across the country, we're not going to solve this problem. And when African Americans pay higher property taxes than they should, that depletes their wealth as well, because they're dipping into their savings to pay property taxes that are unaffordable. It causes sometimes their homes to be foreclosed. Cities and counties condemn their homes and resell them to speculators for only the defaulted property taxes. This is a critical problem nationwide that's depressing the wealth of African Americans, and that should be addressed.
Thank you, Mr. Chairman.
Thank you, Senator Menendez. Senator Scott is recognized from South Carolina for 5 minutes.
Thank you, Chairman Brown, for my 10 minutes. I appreciate that very much. Noting that Senator Menendez used so much time, I appreciate the new standard, and I will take advantage of that. Thank you so much, Chairman, for allowing that, and Senator Menendez for setting the standard. I say that with tongue in cheek, of course. One of the things I'd say is that, I was saying it prematurely earlier, that Republicans and Democrats both agreed that we should find a way to make the American dream more attainable and more achievable for the average person in this nation, no matter the color of their skin. That is something that we should all celebrate, and frankly, we should all believe. I'm not completely convinced that others believe that as much as I do, but it certainly is the case that we want Americans to achieve the American dream, and nothing speaks of the American dream, in my opinion, more than home ownership. As a kid who grew up really in apartments and in family members' homes, the thought of having my mother own her own home and have a garage attached to her home that she's able to drive into and to be safe as she gets out the car, as opposed to just having an apartment complex where she has to be very careful when she's getting out of the car from after a 16-hour shift or an 8-hour shift that ends at 11 p.m. is part of the reason why this issue is so incredibly important to me personally, and why I, like so many other Americans, millions of Americans, dreamt of home ownership as a way of not really creating equity in America, but simply of having a safer, healthier environment for my mother to come home to. And as we have this conversation, I hope we don't overlook the fact that we are all striving to accomplish something that is sustainable. Senator Menendez said it well, that we have to have responsible decisions made around home ownership. And I think we can actually increase the number of people eligible for home ownership in a responsible manner by including within the scoring models that we use for credit worthiness those folks who are paying rent on time. And so many of the models looked at by the GSEs, they don't consider things that are simple. Thankfully, we passed legislation, my legislation, the Credit Score Competition Act, that allows for these credit agencies to look at whether you're paying your utility on time, whether you're paying your phone bill on time, whether or not you're paying your rent on time. Those are three strong indicators that we should use to increase the number of people in this nation, and specifically minorities in this nation, who are already credit worthy. But we're not using the information. That's wrong. We should change the model so that those who are credit worthy have a chance to be a homeowner. It's that simple. And I'd ask Mr. Peter and Ms. Rice, am I missing something on that specific point? And knowing Chairman Brown will not give me 7 more minutes, I'd ask you to have short answers so that I can get to my next question.
No, you're absolutely right, Senator Scott. That's one of the reasons why the National Fair Housing Alliance started our Tech Equity Initiative, to de-bias all of the technologies that are used in the housing and financial services space. 30 plus years ago, and I'm telling my age, when I was a loan underwriter, the 2 most critical pieces of information that I looked at to determine whether or not a consumer was credit worthy and could pay their mortgage obligation was, what is your current housing payment? How well do you pay your rent? And what is your housing payment shock? And if those 2 things were on point, my job was 80% done.
Awesome.
But do you know, Senator Scott, we do not consider those 2 key factors today in the underwriting process, as you just said. And the reason is because there's no infrastructure to collect that information, and we need to build that, and the GSEs could go a long way to doing that.
Thank you. Mr. Peter, can you give me a quick answer to that question so I can get to my last one?
Yes, thank you, Senator. So fundamentally, the problem in the housing market today is that we have a supply shortage. And this supply shortage, in combination with federal housing policies, which tend to stimulate demand, only ends up driving prices higher and higher. Currently, we have 10 to 15% home price appreciation. This has been going on for a year. If this goes on for another year or 2 more years, it's going to be pricing many.
Mr. Peter, let me ask you a more specific question. If we use more variables in understanding someone's credit worthiness, would we see an increase in access to the American dream called homeownership?
I mean, Senator, we can expand the base. However, if we don't have more houses available,
That's a different conversation. So the answer to the question is yes or no?
Sure, yes.
Okay, so there is no question. If you live in Charleston, South Carolina, there's no doubt about it. We have more buyers in the market than we have sellers. We have a real problem with capacity. I understand that. The point of my question was whether or not, if we started looking at the entire financial picture of a borrower, would more borrowers be credit worthy than the ones that do exclude your rent, your electric bill? And I think that answer is pretty clear. And knowing that my time is up, I'm going to, until Chairman Brown cuts me off, make a statement as opposed to asking another question. Because my thought is that Senator Menendez made a really good point, which is that if you look at the average net worth of a household that owns a home, it's about $255. One that rents is about $6,300. We should certainly bridge that gap. That should be part of what we do as members of the Senate and Congress, is to look at ways for us to close the chasm in the most responsible way. I oftentimes walk into hearings and asking myself, based on the title of the hearing, am I in the same place as my friends on the other side? And sometimes the answer is yes, and sometimes the answer is no. I would suggest that we focus on the problem, and even if we come to solutions from different pathways, that we don't demonize folks who disagree with your approach to solving a problem. I actually think that making the borrower who's already creditworthy a focus of my attention actually will increase homeownership in the minority community faster than other ways. I think if we can address the assessment issues, which are more a county issue than it is a national issue on the county level. Having been a chairman of a county council, understanding the 5-year rotations for assessments, certainly if your property values increase faster in your more affluent communities, but you don't have assessments but every 5 years, that's like common sense. The challenge is that is not specifically aimed at any race of people. That is something that we should pass down to the states and to the local level. We should spend our time in this area and focusing our attention as much as possible on those issues that we should control, not that we can control, but that we should control from the federal level. Thank you so much for the extra 2 minutes and 12 seconds. I know that it hurt your heart, but it warmed mine, Senator. Thank you, Chairman Brown.
Senator Scott. Senator Warner from Virginia is recognized for 5 minutes.
Well, thank you, Mr. Chairman. I appreciate Senator Menendez and Senator Scott on the new 8-minute Brown rule. I promise I won't try to take the whole 8 or 9 minutes. Let me actually echo what Senator Scott just said. I agree with him and was proud to co-sponsor his legislation on trying to have a smarter, more reflective credit scoring process. But I do think we need to appreciate the fact that home ownership is one of the biggest indicators of wealth in this country, and we all have cited many times the roughly 10-to-1 ratio of white families over black families. A lot of that due to a home ownership rate differential. And remember, all those rate differentials were based on pre-pandemic data. So my fear is the numbers are even worse right now. And echoing what Senator Scott said, looking at this, that will help minorities, but will help all first-generation home buyers. I've been working on a proposal, Chairman Brown, that I hope to solicit bipartisan support for, that would say, taking advantage of these record low interest rates with a slight one-time federal subsidy on bringing down the interest rate, can we create a 20-year mortgage product that would be available to first-generation homeowners, and disproportionately that'll hit people of color. I'm not sure my kids should take advantage of that if I can help co-sign a note. Oftentimes first-generation homeowners don't have that ability. They don't have someone who's accumulated wealth. But a 20-year mortgage note, that would, the way we've been able to do the pricing, end up with a similar pricing to what a 30-year mortgage would be. That would accomplish two goals. One, it would not drive up the house prices that Mr. Peter and others have talked about. If we could deal with that affordability issue, it would allow individuals, literally the compounding effect. If you got a 20-year mortgage, you are accumulating wealth in that mortgage at twice the rate as you would at a 30-year mortgage. 5 years in, you've got twice as much equity in a 20-year note as if you've got a 30-year note. So, Ms. Rice, I'll start with you and then I'll go to Mr. Peter. If we have this kind of product out there, and we recognize the wealth differential a lot due to home ownership, wouldn't this be one way in a fair approach, offering this to only first-generation home buyers, where we might be able to attack this problem?
Thank you, Senator Warren. It's a very great question. Yes, in fact, the National Fair Housing Alliance has been working in tandem with the Center for Responsible Lending and the Urban Institute to conduct research that has landed us squarely on the point that you just raised. Our research shows that by focusing resources to first-generation home buyers, that we will be hitting more of the underserved groups that we are trying to help and who have been disproportionately impacted by our legacy of unfair and inequitable practices. And yes, I do think that your 20-year mortgage product is a great product to add into the ecosystem. We need as many products and programs as we can, quite frankly, that are implemented via an equity lens, not in a discriminatory fashion, but via an equity lens. And so I encourage, and I'm sure you're already doing this, to ensure that there's a cloak of the affirmatively furthering fair housing mandate in the implementation of that program, to make sure that it's being distributed through the right channels so that it can reach those underserved consumers. Recognizing that communities of color disproportionately are unbanked or underbanked. This is not an income issue. This has nothing to do with income. It is sheerly a virtue. It is a construct of the fact that we are a highly segregated society based on race and opportunity. The opportunities are equally segregated. So we've got to make sure that people can actually have access to these programs.
And I agree with you, Ms. Rice. And one of the reasons why, working with Chairman Brown and my colleagues in our December bill, I was proud to get $12 billion to go into community development financial institutions, CDFIs, who have a history and a focus on the underbanked community. Mr. Peter, I'm going to go to you in and this will be the last comment I'll make. And I think after you're done, it'll go to Senator Van Hollen. But I think one of the things we're trying to structure here is focusing on equity accumulation, not on simply subsidizing interest rates, so that we don't end up having the effect of pushing up home prices. Let me grant you your premise of your earlier comment. We do need more housing stock supply, but Mr. Peter, could you go ahead and comment at least on this notion of increasing our investment in trying to accumulate equity rather than pushing up home prices, and a 20-year mortgage,
Yes.
how it might deal with that?
Thank you, Senator Warner. Yes, I fully support your proposal with the 20-year term, and I generally support any approach, any solution that focuses on wealth building. And the beauty of the 20-year loan term is that, as you said, it doesn't get subsidized, it doesn't get capitalized into higher home prices. And also the research that we've done, it shows, once we looked at foreclosures after the great financial crisis, we found that after accounting for risk factors, we found that loans with a 15 and a 20-year loan term had half the default rate of a 30-year term. So this would actually help, a 20-year loan term would actually help tamp down foreclosure risk, and it would build wealth, as you've said. After 5 years, you have built up twice as much as equity. After 20 years, you own your home outright. So you have actually money available to pay for your kids' education. You have money to save for retirement. And also you're paying with a 20-year term, you're paying yourself in effect instead of paying interest to the bank. So the interest savings that you accumulate over the term of the loan also could potentially be used for additional wealth building. However, I would also add that in the housing market, there are plenty of other policies out there, such as the competition between Fannie, Freddie, and FHA that oftentimes ends in a race to the bottom on lending standards. In general, the risk level of FHA. So I think we need to be careful that we kind of balance both approaches of wealth building, but not at the same time doing too much to promote demand while we have a supply shortage.
I agree with you, and I know we'll go to Senator Van Hollen. We do need to work with the GSEs and others to make sure that if we were able to get this 20-year product, we could also get a aftermarket securitization market. And I think Chairman Brown's gone. I think I was supposed to call on Senator Van Hollen. I was instructed next.
Thank you, Senator Warner, and thank all of you for your testimony. Mr. Rothstein, in your book, The Color of Law, you point out that after decades of explicit segregationist policies, that so-called race-neutral policies can still continue the discriminatory impacts and effects. You've mentioned that the transportation falls into that category. And you mentioned it earlier this morning, but as you know, in Baltimore City residents spent significant time and planning to establish a red line, a Metro East-West line. $900 million was going to be made available by the federal government. Unfortunately, Maryland's governor pulled the plug on it. Can you comment on the red line as an example of how we could have helped remedy some of this historic segregation?
This topic, I mentioned earlier this topic that you specifically addressed, the red line, the cancellation of that line that would have enabled African Americans to access better jobs and better retail opportunities and better housing. And it was canceled in order to shift money to highways that would speed the commute of suburbanites into the city. I said earlier that this should be deemed a violation of the Fair Housing Act because it has a disparate impact on African Americans. And I would say also in response to Senator Scott's comment before, that the exploitation of African Americans by lagged assessment systems is not simply a county problem. That's also a violation of the Fair Housing Act and should be deemed so. So I agree with you that the biggest problem we face is not race explicit policies today. They are policies that are superficially race neutral and but have a disparate impact on African Americans in particular and other minorities. They reinforce segregation. Let me just mention one other that has been, it seems to me everybody on this panel and every senator who's spoken have agreed that the zoning laws that we have in this country exclude African Americans in effect, not explicitly racially, but in effect for many opportunities for housing, and they constrict the housing supply. When Ben Carson was appointed Secretary of Housing and Urban Development by President Trump. The first thing he said he was going to do was withhold federal funds from communities that maintained exclusionary zoning laws. There's a lot of verbal laudatory statements about abolishing exclusionary zoning, but the people who support it somehow lose faith in it, and we never heard from that again. So I think if you're looking for a bipartisan approach to housing, one of the first things that you could address is zoning laws that have a disparate impact, race-neutral zoning laws that have a disparate impact on African Americans and other minorities. Opening up housing supply that would do would not solve the problems of segregation, but it's a necessary first step if we're going to address those problems.
Well, I appreciate that. And I think, in President Biden's American Jobs Plan, he does discuss these issues, both in terms of zoning, but also in terms of remedying the transportation policies, which, as you say, in many cases were race neutral on the surface, but had these impacts, and we're feeling them in Baltimore. My dear friend, former Congressman Elijah Cummings, the red line was one of his goals, and it was a real tragedy to see that the plug pulled on that. We're going to look to see if we can somehow remedy that. Speaking of the Biden administration, I was pleased to see that today the Secretary of HUD announced that they are going to reinstate the Obama administration fair housing policy. That's an important step. On the issue of housing, Dr. Reese, you mentioned in your written testimony the Housing Mobility Demonstration Project. I'm sure you're familiar with the Thompson v. HUD case in Baltimore City that demonstrated deliberate policies over years in Baltimore for housing segregation. Baltimore City was one of the worst in the country. That case resulted in a consent decree that includes a mobility program, housing mobility program. Senator Young of Indiana and I have introduced a proposal to add 500,000 new mobility vouchers, and President Biden includes something in his plan too. Can you comment on why these mobility vouchers can be important?
Yes, thank you, Senator. And I actually, with my time at the Kirwan Institute, worked on the design of the remedy in Thompson v. HUD. And as you've seen in Thompson v. HUD, families are prospering and thriving from being in healthier environments. This builds upon this extensive body of literature, most recently the work of Raj Chetty that shows just the profound economic benefits, particularly for kids, if we can get them into healthy homes and healthy neighborhoods. I would argue that right now mobility programs are underfunded generally in comparison to other housing programs. So I think anything to provide additional mobility vouchers would be beneficial from not only just a fair housing perspective, but also from a child development perspective, an economic development perspective, because we know the long-term benefits of these programs are quite profound.
Well, thank you. I see that my time is up. I had some additional questions for others, but I will now turn it over to Senator Cortez Masto. Thank you all.
Senator. Thank you, everyone. This is such an important conversation. As you can see, everybody participating, I think we can all agree we have concerns about the discrimination that we see, particularly in mortgage lending, as well as just in housing discrimination. So let me just jump right into it, because I was listening to Mr. Rothstein. We were talking about zoning laws that exclude African Americans and engage in disparate treatment, whether they intend to or not. It's happening. What other tools do local and regional governments have to proactively prevent housing discrimination? Before we get to the federal laws and enforcement of that, what locally do local governments have to really lean into this to also address housing discriminations besides addressing the zoning laws? And Mr. Rothstein, curious if you have any other ideas.
Well, we keep on talking about things, the federal policy, but they're also in the purview of local government. There are municipalities across this country that do have their own down payment assistance programs, recognizing that they also are responsible for the segregation that government created. So it's not simply the federal government that can do this. Another important issue, not of local, but of state government, is enforcement of the Fair Housing Act's basic non-discrimination proposals. uh, provisions that continue to be violated. I'm sure you're aware of the explosive survey that Newsday did, Long Island Newsday, 2 years ago, of continued steering by real estate agents of African Americans who can afford to buy homes in healthier neighborhoods and who steered away from this. Well, we are ignoring and have been ignoring for many years the important role of state government in licensing real estate agents. This is not a problem that simply is the responsibility of the real estate agency itself to fix. Those real estate agencies that are steering whites to white neighborhoods and African Americans to black neighborhoods, and that continues to exist as that Newsday expose shows, are violating their state's non-discrimination policies and can be enforced by the state licensing agencies. And that would be an important local policy that I think should be followed. So those are just two of them.
Well, thank you, and I appreciate that. And let me just highlight, because I know there was a recent report from the National Association of Realtors who found that Black households are more than twice as likely as white ones to be rejected for mortgage loans. So I know the realtors are really trying to address this as well, and I appreciate your comments. Ms. Rice, anything else to add to that, particularly when it comes to looking at identifying and flagging repeat offenders of housing discrimination across the country? Is there more that can be done at the local and state level?
Yes, thank you for the question, Senator Cortez Masto. There is quite a bit that local and regional governments can do. One of the first things they can do is fully enforce the affirmatively furthering mandate, the affirmatively furthering provision of the Fair Housing Act, which, as you know, has to be implemented on a voluntary basis. There's no private right of action with that particular provision of the law. In my home state of Ohio, a great example of this in Zanesville, the city of Zanesville for over 50 years denied water service to a predominantly African-American neighborhood called Coal Run. Even though the residents of Coal Run paid their taxes and paid additional assessments to get water lines extended to their homes, after 50 years, they still were having to catch water to take baths and to cook and to do other things in huge tin cisterns in their backyards. Senator Cortez Masto, the city extended water lines up to the neighborhood of Coal Run, around Coal Run, and then back out Coal Run to purposefully not give these residents water. That's a violation of the AFFH provision, and the city could have absolutely voluntarily complied and provided these consumers water access. That same thing is happening in hundreds of communities throughout the United States of America today. We still have the problem and challenge of local communities not only not implementing the AFFH provision, but local communities like the city of Cleveland could adopt their own local community reinvestment ordinances in order to say, look, we're going to invest in banks that invest in all of our communities and serve all of our communities. And I just wanted to add on to one point that Richard made, and that is that state licensing, real estate licensing divisions can require their real estate professionals to get fair housing training, and they can oversee that fair housing training to make sure that it is of high quality. That's not being done in most states in America, and if we did that, that would go a long way towards expanding fair housing.
Thank you. And so I have legislation, the Housing Fairness Act of 2021, that would reaffirm HUD's commitment to fair housing enforcement by increasing funding for fair housing programs, making improvements to the Fair Housing Initiatives program, reinstating the affirmatively further fair housing rule, and providing additional funds for research into housing discrimination. I want to thank my colleague, Senators Van Hollen and Menendez, for co-sponsoring it. And I know, Ms. Rice, thank you to the National Fair Housing Alliance for endorsing this. I think it is so important that we continue to provide and support independent groups, folks that are out there that are actually looking to address this problem, really bringing it to the attention of our local and state governments, holding them accountable, but making sure we're doing right by homeowners as well. So thank you for that. I know my time is almost up. I don't know. Oh, I do. So I'm going to pass it off to. Oh,
I'm sorry. I am saying thank you, Senator Cortez Masto. Senator Smith is recognized for 5 minutes.
Thank you, Chair Brown. And I noticed that our colleagues were just skipping right over your formal role of handing the ball from one of us to the other of us. So, but
I'm on the Finance Committee for a while. Thank you.
That's right. I really appreciate this committee and all of the testifiers today. I want to just start by thanking my colleague, Senator Rounds, for bringing up the issues around Native housing. Senator Rounds is the ranking member of the Housing Subcommittee that I chair, and I'm looking forward to working on those issues with him there, and also issues of rural housing and discrimination in rural housing, which is such an important issue. And I really also appreciate the conversation today about the federal legacy of housing discrimination and what we can do to turn that legacy around. Today, though, what I'd like to focus in on is the ways in which local governments' policies have had discriminatory impacts and what tools we have to address that and to encourage zoning reform at the local level. So many zoning laws, we know, at the local level were created to racially segregate neighborhoods, even after the civil rights laws outlawed overt housing discrimination. And in fact, these zoning policies that restrict high density housing options were often intended to limit racial and economic diversity in certain neighborhoods, and were aimed at maintaining or even raising housing values in areas that were mostly where white families lived in single family homes. Now, in Minneapolis, this is one of our worst legacies. We have some of the worst housing disparities of any place in the country. And in an effort to flip that around, in 2019, Minneapolis adopted the 2040 Plan, which is a long-term planning document that includes support for local zoning reform. And they developed housing priorities specifically with the goal of expanding access to affordable housing and quality housing everywhere in the city, where the city is actually quite segregated to this day. The plan, for example, would reduce minimum parking requirements for new housing production. It would legalize triplexes citywide, and it would allow for bigger residential buildings to be built along transit corridors. And one of the goals was, of course, to increase housing supply, but also another specific goal was to reduce racial disparities. So I'd like to ask, if I could, Ms. Rice and Mr. Reese, if you could comment on this, if you could comment on whether you think the 2040 plan is going in the right direction, what the impact is of local zoning requirements and reforms like this, and what the federal government can do to encourage zoning reforms like this to move us towards a more anti-racist policy. Ms. Rice, why don't you go first?
Sure. I was going to let my colleague Jason go first.
Either one.
Thank you so much. Thank you so much, Senator Smith, for that question. We absolutely think the 2040 plan is the kind of plan that local jurisdictions need to be undertaking in recognizing the role that local governments have played in fostering segregation. But many of the exclusionary and restrictive zoning ordinances that were put in place during the 40s, 50s, and 60s and 70s were put in, and even up until today, were put in place to restrict the ability of people of color to move into those neighborhoods. In fact, the first time that the disparate impact doctrine was used under the Fair Housing Act by the Nixon administration was to address a exclusionary zoning ordinance that the city of Blackjack had put in place in order to keep out residents of color. So this is a long-standing tool that has been used to create segregation, and these zoning ordinances, as I mentioned in my statement, are still in place today, and they're still serving their purpose of driving racial inequality. So one of the reasons why we're still seeing the disparities that we're seeing when it comes to racial disparities is because so many of these systems are still in place and they're still serving their functions. The federal government can help and create incentives for jurisdictions to eliminate exclusionary zoning ordinances by essentially applying, as I said before, the affirmatively furthering fair housing mandate to all of the areas to which it should be applied. AFFH should be applied not just to housing, but also to community development. And if we do that, we will see much broader voluntary compliance with the AFFH provision.
Thank you. Mr. Reese, I'm actually a little over time, but I'd love to hear your comment briefly, please.
Yes, thank you, Senator. What the Twin Cities is doing now, the whole country is looking at, because it does potentially set a model going forward about how we can reform zoning laws, particularly laws that limit anything other than single-family housing. My one word of advice, looking at the scholarship around this, is that density alone will not produce affordability unless we're attentive to making sure that other kind of inclusionary housing tools are in place, things like community land trust, supports for home ownership for first-gen homeowners, and also then the alignment of other kind of subsidized housing within these spaces as we up the density within these places. I do think there is also a role, in addition to what Mr. Rice noted in terms of AFFH, of incentivizing and thinking of ways to get local communities to collaborate together to reform these laws. Regions are going to be more economically sustainable if these land use regulations are aligned across regions. And the problem is, it takes resources, it takes time planning to build the relationships, to get the consensus and the buy-in to do that. I referenced the Sustainable Communities Initiative. I think that's a great example of how you can run a competitive grant program that encourages this kind of multi-jurisdictional collaboration to take down these exclusionary barriers that we know are so detrimental and so deeply intertwined with our racial equity issues today. Thank you, Senator.
Thank you so much. Thank you, Chair Brown.
Senator Ossoff from Georgia is recognized for 5 minutes.
Thank you, Mr. Chairman. I appreciate the opportunity. Thanks to our panel. Last year, in meetings in communities across Georgia, even in the midst of the COVID-19 pandemic, in fact, in many cases, because the COVID-19 pandemic exacerbated the financial distress in which so many families found themselves, and because the impacts of the pandemic were disproportionate along class and race lines, affordable housing is one of the most consistently raised issues in community meetings. And I'd like to just offer you, Ms. Rice, and you, Mr. Reese, each the chance to offer for this committee, as we consider how to build legislation that will be a comprehensive infrastructure and jobs plan over the next couple of months. What do each of you please believe are the one or two most important considerations or policy objectives which may currently be neglected in the prevailing discourse around this bill as we craft it, as it relates to affordable housing and equity, race and class equity, and access to affordable housing? And I'd like to begin with you, Dr. Rice, please.
Senator Ossoff, thank you so much for the question. So I have a litany of things, but I'll only mention two. One is to make sure that we're addressing both supply and demand side issues in the infrastructure bill. It's critically important. And one of the things I do want to lift up is that in every state in America, we already have an existing sort of cadre of naturally occurring affordable housing, but much of it is not in pristine condition. And so we need laws like the Neighborhood Homes Investment Act, which we're championing to be enfolded into the infrastructure bill to help build up the infrastructure of naturally occurring and already existing affordable housing across the country. But we have to address those supply side issues, but we also have to address the demand side as well, because if we don't, we will just be further exacerbating inequality. We have to make sure that marginalized communities are able to access these new affordable housing opportunities that will be coming online via the infrastructure bill. The second one is we have to make sure that we're paying attention to the already existing inequitable landscape on top of which this infrastructure bill will be unfolded, right? We did not pay attention to that with the implementation of the CARES Act, and that's why the CARES Act ended up exacerbating inequality and the wealth divide. So we have to take that into consideration to make sure that we're building equal access to these opportunities in the infrastructure bill.
Thank you so much, Ms. Rice. And Dr. Reese.
Thank you, Senator. I would completely agree with Ms. Rice's comments. Going back to an earlier discussion today, I do think the proposals like the Livable Communities Initiative could be very profound in assuring that alignment in transportation infrastructure and housing infrastructure. In addition to that, I think as we think about housing, we have to understand and realize the importance of the social side of housing. Expanding HUD's self-sufficiency program even further, I think would be a beneficial step in helping prepare families to potentially even step out of the existing affordable units into home ownership into the future, as well as to prepare them financially to economic shocks that could come in the future, just like we've dealt with the COVID pandemic. I was evaluating a housing mobility program just recently where coaching and social support were critical to help families avoid losing their housing, even though most of them lost their employment due to the recession following the pandemic. So these types of programs, even though they're not as often seen as important as, say, big transportation projects, they're critical to the sustainability of families within these housing units and to their development and ability to access home ownership later.
Thank you, Dr. Reese. And Ms. Rice, with the little time I have left, I think you touched upon the importance of the quality of the affordable housing stock. I was recently meeting with community leaders in Albany, Georgia, and for homeowners without discretionary income, there's unrepaired damage from natural disasters that's a decade old. How would you propose Congress ensure that communities like Albany can invest in retrofitting and upgrading damaged housing stocks, because the quality of a family's housing has a huge impact on quality of life, state of mind, opportunity?
Sure. The Neighborhood Home Investment Act, Senator Ossoff, is specifically designed to address that issue, right? Where we have people who are living in housing that is not in pristine condition, but they need a little bit of gap because, as we know, when you sometimes you need more work done into the home than what the market value of the housing can bear. And so the Neighborhood Home Investment Act is specifically designed to provide that gap, to sort of bridge the gap so that consumers can get the sufficient funds that they need in order to upgrade their housing.
Thank you, Ms. Rice. Thanks to the panel. Mr. Chairman, I yield back.
Thank you, Senator Ossoff. Senators Tester, Warren, Sinema, Warnock, Shelby,